Good day crypto trader. Solana, SOL, price erased most of January's gains as headwinds rose throughout the week with a different element almost every day. With almost no risk appetite and few non-binary elements, it seems hard to see a positive outcome. Traders will need to prepare for drastic price action and possibly more pain in the coming days and weeks. The price of Solana varies from one moving average to another. Last week, Solana saw a sharp rejection from its 200-day simple moving average, SMA, and losses were seen to extend as bulls await support from the 55-day SMA. With the SOL still technically a dead cross trade, the bears have the upper hand and the momentum to keep adding pressure. Add to this week's dovish central bank announcements, Ukraine-Russia geopolitics, and rebounding energy prices, and it's not looking good. SOL traders should watch $19.04, a historically crucial level, and the 55-day SMA area, which should provide enough support. Unfortunately, with strong headwinds, it would only take one of those elements to resurface to create a negative position. That would mean a major decline of catastrophic proportions towards $5.10. With a double support belt and an already reduced risk bonus, maybe it would be enough to jump higher. Of course, as the war approaches its one-year anniversary, both sides of this war are feeling a certain amount of fatigue. You can always go back to the 200-day SMA and wait for the next external catalyst to kick in. Dogecoin, Doge, price action to stop in 2023 winning streak. With the bulls still able to go on a streak and win the first week of February, that ship sailed this week. To make matters worse, there is not one element, but many elements that explain why Dogecoin's price has lost more than 10% of its value in just a week. Dogecoin price has been falling since 2023, beginning when moving averages were the main factor. The main chart indicators are the 55-day and 200-day simple moving averages, SMA. Unfortunately, Doge saw a strong rejection as it entered near 10 cents as the bears simply pinned the bulls into the ground, and what has been going on this week is too much confusion to overcome. Doge couldn't have ruled out worse as the technical shift is in line with the risk shifts taking place in the markets this week. Traders who didn't like Jerome Powell's speech earlier this week were unprepared for the geopolitical tensions that came later this week and into the weekend. Since these elements won't go away that easily, look for downside if the 200-day SMA fails to hold support at $0.0775, resulting in a sharp decline to $0.0566. A turnaround could come when attacks in Ukraine slow down over the weekend and begin to taper off next week. Markets would begin to soften and price in the risk premium. Expect a quick recovery with another 10 cents, but be wary of a double top formation and possible pullback.